Right, welcome traders. Um, we did get a request to make an update on the situation of USDCHF, and that's definitely what we'll try to do right now. As usual, we try to keep this webinar and this analysis as educational as possible. But before we go into the analysis, first of all, there is disclaimer explaining that trading foreign exchange and the global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor, and this webinar is for educational purposes only. Now, um, we try to analyze the markets from the higher time frames to the lower time frames. Why? Because the monthly, the weekly, and the daily time frames are better off when it comes to finding the directions of the market. But when it comes to actual entries and confirmation of the trades, the better time frames will be the intraday time frames, obviously, which would be 4 hour and the 1 hour time frames. So starting here from the monthly time frame, what do we see? Now from here, we this area indicated by this magenta rectangle shows that this area is actually a historical area for USDCHF, and we can see how that from here the market bounced off to the upside. Again from here, when it got to this area, it bounced again to the upside. Then when it got here this time, this area was broken to the downside. Of course, when support is broken to the downside, it then becomes a resistance area, and then we can see how the market went and retested this area again, and then the market failed to go above it this time around and melted to the downside. Now that we have gotten a break above this area again, this area should now act again as support area, possibly for another impulse to the upside. So clearly we can expect, from a monthly perspective, we are expecting a an impulse to the upside. So going down into the weekly time frame, what do we see now from a weekly perspective? We can see that in all these move to the upside from this green candle here, from here up to the upside here, there's actually two candles which is not related to the move. That means that these two candles here, these two red candles here, is not related to all these move to the upside, and that shows that this is a strong demand area. So a demand area is actually a support area, so we do expect this area again to act as a support from a weekly perspective. It then means that from a monthly perspective, we are expecting an impulse to the upside. From a weekly perspective also, we've been able to identify this area to be an area where that could act as support for another continuation to the upside. Again, if after an impulse like this, what you expect is a correction. And if we decide to measure the correction here, we can see that from here, if we want to measure the correction, we will take our Fibonacci from the low of the impulse to the high of the impulse, and we can see that the 382 and the 50 fib is lining up. Sorry, excuse me. We can see that the 382 fib level and the 50 fib is lining up around this area, which we said is could act as a support. So and the market has already tested the 382 fib. We could still get a small push to the downside to the 50 fib area here, possibly before the rejection to the upside for more continuation and the creation of a higher high. So this is the situation from the weekly time frame. We've been able to deduce from the monthly and weekly time frame that we are expecting some continuation to the upside. Now let's go into the daily time frame to see the situation from a daily perspective. Now from a daily perspective, sorry, I need to take the Fibonacci out now to bring some clarity. Okay, Okay. All right, so from a daily perspective here, we can see that we do have this overextended M pattern here. You can see here that this market has created an M pattern here. Now, after an overextended M pattern like this, what you expect is the market to go, to retrace back up at least to the 382, at least to the 382 Fibonacci level of the impulse from the high here to the low here. Sometimes we do get a continuation back almost to the neckline of the support area here, which should now act as resistance here. So from the daily perspective, we are already seeing a bullish pattern here, because the M pattern is actually a bullish pattern, and we can expect that from here again the market should go up to at least to the 382 fib level if you decide to measure your if you decide to take your Fibonacci from this high here to this low here. Now, we've been able to deduce from the monthly, weekly, and daily time frame that we are expecting some kind of continuation to the upside. So how can we approach this longing opportunity here? Because right now, how can we how do we approach this longing opportunity here? Now, until we will get a clear bullish signal from a 4-hour and probably a 1-hour perspective, we would absolutely not be taking any trade here. Why? Because clearly the market is still in a downtrend, and it can easily melt. It can continue melting like that to the downside, and this would be and obviously this would not be good for us. So we'll definitely have to wait and keep watching on the 4-hour time frame for a bullish signal here. Now, what we can do to confirm how we would know, or possible things we can do to know when the market has started creating this bullish pattern, we can draw a we can draw a counter trend line here like this. We can draw a counter trend line here like this, and you can see clearly that obviously the market is still below this trend line. Now, if we would get an impulse above this trend line like this, not so much like that, just something like this, if we would get an impulse and they close above this trend line like this from a 4-hour perspective, obviously, then on the retest of this broken trend line and this on the retest of this broken trend line here, inside of this area is where we would now be monitoring price action to go in for our longing opportunity. Remember that when the market will be when the market will be retracing to the downside, it would have become bearish again. So we'll be waiting for it to shift again to the bullish side, and then inside of this area, when we begin to get those bullish signal, is where we will now be taking where we will now be going in for our long. First of all, to target the area which had identified as the neckline of the M pattern that we saw, and then of course, if we do get a break above that neckline, we could still get the USDCHF could still rally to the upside. So this is the situation on the USDCHF time frame. If you do have any comments, or if you do have any other pair you do want me to analyze, feel free to drop it on the commenting section for now. And cheers and have a nice time peeping.